show. We're live again for another week. And this week, unfortunately, I am a bit grubbed out and I need a haircut, but here we are. So today I'm going to talk about, this week, talking about real estate. And of course, anything you have, any questions, drop them down below. I'm happy to answer them like I do every single week. Shameless plug before I start. I do have a couple of opportunities coming up, but there are some pretty great deals you can negotiate right now in the real estate market. So I'll start with this. There are opportunities right now. If you're sitting on capital, if you can pull capital out and you're able to, sort of lend that out, I do know some opportunities. Hit me up if you're looking to, park some money, making 8 to 11% really safely. Like I'm not talking risky second mortgages where you can make between 12 to 20%, but I'm talking more safe stuff like first mortgage stuff, super secured quality deals that you won't lose your money on. So yeah, there are lots of those popping up. Shoot me a message to rosehartcapital@gmail.com or at Mike Rosehart. And I also have, for those people who are hungry for some properties, a couple more properties are coming up. We're just finishing a really nice property. It's a triplex, sort of near Old South in London, in the west side of town. It's got a 3-bedroom, 2-story unit. We're rented for $1,900. The tenant pays their own hydro. There's four hydro-meters, so the tenants all pay their own hydro and heat. So the upper unit's paying $1,900 plus their own utilities. There's a 1-bedroom unit for $1,200, I think, plus utilities, and a front 2-bedroom unit that's rented for $1,500 a month. So almost $5,000 a month rent plus tenants paying their own utilities. So we're talking $60,000 a year in income. That one's gonna be listed for $779-ish. So I mean, it's a decent opportunity. If someone wants to pick something up, just park some cash and make like a 10, 12 with some leverage, maybe a 20% return. Well, rates are still low, and I think there's some pretty good value right now. If you're thinking about refinancing before the next wave of rates increase, this is probably the last time you want to do it. So if you're going to lock in a rate hold, this is the next time to do it. Otherwise, I think it's smart to get variable plays, and the variable plays will come down, I think, over the next 2-3 years. What the Fed is going to do is going to continue increasing interest rates to stave off inflation. They'll fix inflation. That'll put us into a recession. When we're in the recession, they'll have to crank interest rates back down like they did in 2008, like they did in 2020, like they've done several times. We've had several tightening and loosening cycles. We're in the same thing now. They're going to put us into a point where they need to then lower interest rates again. So that time will come. So I'm still bullish on, I think up until right about now, fixed rates have made sense. We're going to go back to a stage where variable is going to make a lot of sense. Also, variable is great because you can break out of the mortgage really cheaply. If you ever need to refinance the property, it's much more affordable to do that. So anyway, and it's easier to qualify too. The stress testing rules here in Ontario are brutal for fixed rate mortgages, much better for variable. So that's something that, that's something you definitely want to be doing. Voyager Digital, down at some point today was down 60-something%. It's down 96% year to date. I think they're going to pull through. I have a couple of shares, not a huge percentage of my portfolio, but a little bit. I like Voyager Digital. I liked them, at $10 a share. I liked them a lot more at 60 cents a share. They've reached peaks of almost $30 a share. So if you're a crypto enthusiast and you believe that the tech and the space, the DeFi space, is going to be here in the next couple of years and will weather this major recession we're in, I would invest, buy a couple of shares. I wouldn't bet the farm on it, but I bet a couple of shares. The other thing is, I also have to shamelessly plug before in the first 5 minutes, I like to plug this for people watching. I do have a Sixplex that has now sold. It came under condition, but then the buyers walked away, couldn't raise the down payment from partners or something. So if you're interested in a Sixplex in an A+ area near where I live, like in the west end of the city, it's one of the only Sixplexes due to zoning. It's one of the only ones allowed in the area legally. So it's a bit of a Charizard Pokemon card type rare gem you might just want to collect. It's rented for $9,500 a month. So it is Buller Road, 337 Buller Road. Beautiful units. It's now fully rented out. One of the concerns was it was vacant. I'm fine. So I've got a property manager. She's going to stay on. She's amazing. At a 5% management fee here in London. If you're looking for a good property manager, by the way, hit me up because she's amazing. I don't even mind plugging her. I shouldn't because you don't want to give away your best people, but she's awesome. She would stay on with the property as well. So it's completely turnkey. You don't do anything because again, it is fully rented at, I want to say $9,500 a month if you add up all 6 units rent plus the coin laundry, in that range. Anyway, you're looking at like $100,000 a year in income, and I would take under 1.2. I'd take like 1.1, high 1.1s is probably the lowest I would consider taking. The only reason I'm considering selling it, and by the way, I had offers on like 1.42. I had someone throw me an offer at 1.5, not in writing, but I got one in writing at 1.42. You're thinking, Mike, why are you gonna take $250,000 less now? And it's like, well, one, the market's conditions have shifted a little bit. Two, I want cash to invest in the crypto dip, in the stock dip, and that property I have a significant amount of cash tied up in. We don't have a mortgage on it, so that's all cash coming to me. And I could put a mortgage on it, that's an option, but that would force me then to be locked in on a commercial mortgage, meaning I have to hold it for an extended period of time. And I have a partner on the property who did all the renovation work, and they want to sell. So there's a number of other reasons that come into play, but again, moving towards my plan of eventually becoming no longer a Canadian tax resident. So that means I'll have to dispose of all my assets at fair market value, including anything in my corps. However, if I buy something just as I'm leaving in a corp, that's fair game. I'll pay tax then if I ever decide to sell it. But when I leave, I file the exit return, I no longer have to file tax returns in Canada. That's the long-term goal I'm working towards. So I would like to shed most of my stuff, anything in my personal name. I definitely want to shed all those properties. I'm almost there. We have 4 properties left in our personal name. So we're getting closer to that exit return where I can, be done with paying tax in Canada. Well, okay. With the caveat that anything I do in Canada will be done inside of a corp, and that corp will pay tax in Canada. Some of that will flow through to a Bahamas corp, but anything personal will have to be disposed of in the sale. So anyway, I do just want to throw that out there. I'm getting a lot of negative comments about real estate. Fair. Like, I've been screaming from the rooftops that we've needed a correction in real estate for a while now. I've been saying that it's coming. It's finally here. It's great. We're seeing great price reductions. We're in the middle of a dip. In crypto right now, in the middle of a dip. In the NASDAQ, a lot of tech stuff in a dip. Real estate in a dip right now. We're actually down month over month for the last several months in a row. It's been great. Stuff isn't moving. So you can get in there and negotiate really good deals. You can get in there and negotiate really great terms. Potentially even vendor financing. So now is a great time to be investing. It's part of why I titled today's video, because I want people to think, real estate isn't dead. Real estate is alive and well, and I think that anyone who has great, fixed rate mortgages right now can continue to hold and is cash flow positive. You should hold. Now is not a great time to sell. You don't sell into the bottom. The time to sell was February. You've missed that boat now. We've dropped 10, 15%. As well as on top of that, it's very, very hard to even get a seller right now, or get a buyer right now as a seller, because there just isn't a lot of demand. Now, I don't have my properties up on MLS. I probably should throw them up on MLS. That's the best thing I could possibly do. But again, I like to market them off market. Part of me is just cheap, and I'm a realtor myself, so I could just list them up. But the effort of all of that too, when you put a property on MLS, you get so many showing requests. You get agents calling you, talking to you for 20 minutes, and it's rude if you don't respond. You can actually get a RICO complaint, which is the board that governs us, if you just ignore them. So it's hard to put a property up when you value your time, because all these agents start calling you and waste your time. So that's why I don't. People ask, Mike, why don't you throw your properties up on the realtor.ca, like get thousands of people to see it? And I'm like, yes, I should do that. But yeah, I have buddies I could pay a little bit to do that, and I probably will do that with the Sixplex. It was up on MLS for a bit, and that's when we got those great offers. I took it down because again it had sold, and then that buyer obviously walked away. It was a shame. I could have closed the deal. They asked me to do vendor financing, and I could have just closed the deal and provided some vendor financing. I didn't feel confident about it. I probably could have closed the gap on it. In both cases that I sold the property, in both offers, I could have closed the gap on it. But hindsight, it is what it is, and here we are, and I'm hoping just to get nice cash out. So if you're interested in that, shameless plug, I don't care. I'm just going to throw it up there. Now go to the live Q&A, and then I'll just ramble on from there. Tell us how to get good deals, 60 cents on the dollar. So Omega, part of finding great deals, and one thing I do want to throw out here right now, just as a pro tip, the wholesalers, a lot of them that I talk to, are not getting 3-4 offers on the wholesale properties now. That's the best place. The distressed properties, the wholesale properties, the pocket listings didn't used to be a thing 6 months ago. It was really hard to find them. There are lots of them now. So you can get in there and talk to a wholesaler and say, hey, wholesaler might have no activity and they're about to lose the contract and be like, hey, why don't we go back to the seller and propose an even lower price? Or back to the seller, propose an even lower price. You can still get your wholesale fee. Maybe you squeeze them a little bit on the wholesale fee, but they stick at their wholesale fee and everyone wins. So now there's an opportunity where the wholesalers can really go back and squeeze those sellers. So there are opportunities where you can maybe squeeze them for financing terms where they finance the deal, or squeeze them for a better price or whatnot. So there's definitely opportunity. I'm excited. I think that in the next 5 years, I will 10x my next 7 years, I will 10x my net worth, which will put me in private jet level wealth, and it will be very cool. I'm really excited for the opportunities that exist, and I'm going to do exactly what I did in the last 5 years, but at a bigger scale. So I'm only going to touch big deals. I'm only going to touch deals that are $1, $2, $3, $4, $5, $10 million large deals, and negotiate really great options. There are going to be people who will struggle through this, people who overextended themselves, et cetera, and so forth. So I'm hoping for those opportunities. I'm excited for those opportunities. You guys can position yourself to, ride those opportunities out in a great way. Now is the time, more than ever, to be frugal, to be focused on building your skills, increasing your income. We're about to ride into a huge opportunity wave. We're already in it, but it's continuing to roll. So this is a great time to, if you're thinking about reading a book or taking a course, learning a new skill set, mentoring under someone, these are the times to do it. Picking up that side hustle. If you're thinking about, should I spend an extra 3 hours in the weekend doing this or that to improve my skills or my income? Yes, now is the time. Should I spend that $5,000 extra on a vacation right now? No, because that $5,000 could turn into $25,000 invested in crypto right now. All of those spending decisions, when you're not being frugal, those spending decisions are going to cost you 5 times the cost of the spend because you're missing out on crazy opportunity right now. There's literally opportunity in every segment. There's opportunity in real estate, opportunity in crypto, opportunity in the stock market, everywhere. Every business I'm looking at, it's just ripe with opportunity. As they continue to tighten, while they raise interest rates, they're basically stopping the pumping of money into the economy. That means there's a lack of capital. So people who have capital, it's a great time. People who don't have capital, again, also a great time because there are people who are distressed. So you can get in there and create value where other people are fearful, where the fear index gets all the way to the max. We used to be in the greed side, right? We're on the greed side of the index. Now we're getting to the fear side. That's the time you can get in there and put those skills to work and make a lot of money on the next, spin from fear to greed. And that will come. It's business cycles. It's never the end. People are like, oh, this is the one, this is the end. It's never the end. There's always a recovery. So 10 years from now, we'll be like, holy crap, everything was so affordable. People will be messaging me, I'm sure, in 2030 and being like, man, I wish I bought Bitcoin when it dipped to like 16,000 or 17,000 USD because now it's 160,000. I would 10x my money. It's like, yeah, I was telling you guys to be buying a little bit of that and buying a little bit of this. And again, diversity is important because who knows for 100% what will happen. We don't know which crypto tokens will be, the dominant ones in the future. 9 out of 10 of them might go to nothing. Same with stocks. Again, it's important to buy a basket. And when you're buying real estate, buying quality stuff too, in quality markets. Okay, going back to the Q&A for a sec here. Insta got hacked. No, my Insta didn't get hacked. If you just read the names of all these people, there's a bunch of bots and copycats, and most of them are out of India where their English is horrible too, and they're using names like Mike Rosehart. That one was a good one. I got about 200 messages from people saying, sending me pictures, screenshots of people trying to like get sold crypto. I'm not selling you crypto. I don't want to invest your money into these Forex, whatever. I don't know. They always have these schemes to get money and get rich. Talk to the person on the phone, right? Like have a meaningful conversation before you send someone money. Don't just do that over Instagram. Anyway, the name is so dead giveaway, right? Like look at the @ handle and it'd be like a mispronunciation of my name in some way. Like Rose Hottie was a good one. Mike Rose Hottie. I was like, okay, at least they're saying I'm a hottie, I'll take that. It's too bad they're probably scamming a few people. They just copy all your photos. If you also check the date of when all the photos are posted, they're all posted the same day and they all have like 5 likes. So that's an easy tell that the accounts are fake. Everyone who's somewhat of an influencer or has a decent following is getting copycatted right now. So it's super, super common. Just report it. Instagram doesn't seem to care. You report it like 20 times over and I mean, eventually it'll get taken down, and eventually they do, and then a new one gets formed. So yeah, if you just check those things, it's easy to see. Also the stories, they don't keep up with my stories. I post like 10 stories a day, more than that, and there's no way they're keeping up with all of my posts. So Traders says, to hell with real estate, precious metals is the place to be right now. I mean, that's an opinion. Although I do like gold and silver, I think it was a great hedge long term against, inflation. Well, it's supposed to be a great hedge against inflation. It hasn't performed all of that well the last decade against inflation. It also has performed terribly compared to every other asset class. So its time to shine is due. The last 10 years have not been good. Year to date is held up okay. Not a great hedge in the sense that it hasn't really outperformed opposite to the market, but it's held its own relative to inflation, basically. I do think there's a season we might see as things get worse in the stock market. Well, potentially could get worse. We don't know how things are going to pivot, but it's likely that things will continue to get worse as we realize that we're actually in a stock market recession. And that will lead to eventually job layoffs and contractions, and we'll go through a tightening cycle, and then there'll be a stimulus again, right? Well, when they're done tightening, they'll be like, oh shit, we're in a recession. Here's a bunch of stimulus money. Let's lower the interest rates again. And the cycle begins again. So anyone who had the opportunity, imagine if you had a whole bunch of properties you bought at the bottom, and then they lower interest rates at the bottom, and now you have cheap debt on a bunch of cheap properties that you bought. There's a plethora of opportunity coming. And so keep some chips aside. Don't put it all in crypto. Don't go crazy. Just liquidating everything. I know people are getting crazy here. You got to remember that if your plan was to always hold said rental property for 5 years or 10 years, or maybe you're gonna hold it for 20 years, you don't care about the price of your property because you've already refinanced it. You've got your capital out. If you haven't, go refinance it. Again, I don't believe in idle capital sitting inside of properties. It's a terrible idea. Pull the capital out, put it to work elsewhere while you can still borrow it relatively cheaply. We're going to get to a point, though, where borrowing against your rental properties doesn't make sense because the opportunities out there don't pay enough to cover the cost of debt. The risk gets too high. But when interest rates were 2, 3, 4%, 5% even still, it makes sense to borrow, right? And put that capital to work elsewhere where you can make way more money on your money. I know people have taken $1 million house that they owned, put a line of credit on it, pulled $700,000 out, and went and private lent that at 12%. They're borrowing from the bank at 4%. They're making an 8% spread on every dollar they borrow from their house. All of a sudden, that's created for them, a net profit of say 8%. So 8% on say 750,000. We're talking over 30 grand a year in positive net cash flow, coming almost $3 grand a month after you pay the extra cost of your mortgage you've now taken on. So that's a huge amount of profit for most people. That's life-changing type of money just by reallocating the assets they already have. Don't go and get a mortgage on your house and then go buy crypto. Crypto is so volatile and unstable. And yes, I think that long term there is huge value in it. But we may go take Bitcoin down to 5,000 before we get to 200,000, right? There is a journey to 200,000, but can you hodl through those downtimes, right? Will you be able to eat? I know people who are crypto, what do you call them? Crypto bulls, I guess, and they're starving right now. They've got the whole farm. They've doubled down so many times. There's nothing left to double down. So don't do that. Don't be that. I also felt pain in watching my holdings drop, but again, I don't need the money to live, so I'm gonna let it ride. And that's where you need to be diversified in everything that you do. Don't go. Make sure you're careful. Keep some chips aside for rainy days. Keep some chips aside for those times when. Hey, how you doing, Hungarian? Peter, how you doing? Just keep yourself in a position where there's opportunity still to nibble in, because things could get worse, but at the same time, I think now is a great time to start dollar cost averaging into these different segments, the NASDAQ, crypto, real estate as well. I mean, we're in a dip right now. So you could negotiate to buy stuff 70 cents on the current market dollar. I don't think we'll see another 30% on top of what we've already seen in real estate as an example. So where you can get in there and negotiate, I can't get in there and negotiate for Bitcoin 70 cents on the dollar. It just doesn't happen. It's an efficient market. Real estate and businesses are not efficient markets. So you can go buy a business from someone who's struggling right now. Maybe they put half their net worth in crypto and they just had to refinance their house, and now their interest rates are 6 or 7%. They can't carry. And so now they may have to sell their business, and they hate their business. They're stuck in a job they don't like. And if you come in there and say, hey, you want to retire in the next 5 years? Why don't I keep you on for 5 years as an employee making 100 grand a year? And it's like, look, you come in every day, no stress. You don't have to worry about the business, all the stresses of owning a business. You get a stable 100 grand a year. I'll take your business over. you finance it for me. We'll work something out right now. And it's like, now I've taken over a business. Let's say hypothetically it's making 500 grand a year, and maybe you're making 400 now because you're paying the owner 100 grand a year. But the owner now is getting a $100,000 a year salary, no stress. They get to walk away and retire, and it's not even about the money because they want to retire, and they might be in a position where they don't have any debt on the business. A lot of business owners that are mom and pops, they don't have a lot of debt on their business. They might have a line of credit. It's got like 100 grand on it. They haven't financed their business, so they can offer you vendor financing terms. It's very common. In a recession, you can negotiate great prices, and no one else is negotiating alongside you. So you're not competing with other people. And that's how it was, a year ago. Everyone was competing. You put a business up for sale, and there'd be 5 people competing for that business. That's not the case right now. Capital has dried up a bit, and so that's where you can really get in there. And in real estate, I look at real estate like a business, but you can buy businesses too, and you could really crank out some potential life-changing opportunities through this recession. So I think this recession is the best thing that could ever happen. You should be so thankful that it's happening. If you're like me and you have a huge net worth and it's dropped quite a bit through this recession, because again, you're fully deployed in the market, so if real estate drops, stocks drop, you're going to fall with it, right? It's part of it. It's most painful. But if you don't have a lot of money right now, the world is ripe with opportunity. Most of my followers watching this, you got like a couple $100 grand right now or less, and you're working a full-time job or you have a business that you're running. This is what you've been praying for. And it's weird because all these people that message me like, I can't wait for a recession, I can't find any deals, all those people messaging me for the last 2 years, now's the time where like there are plenty of deals. And if you just apply what you've learned over the last couple of years watching my channel and then practicing, now's that opportunity. And they're all sitting there with their hands together like, oh, I'm sold for 8, I don't know what's gonna happen. It's like the fear, right? The fear is going to stop you from doing anything until the recovery happens, in which case it's probably already too late because everyone's realized that the train is moving out of the station in the upward trajectory, right? So there is still time to get in on when the train's moving up, so it's okay if you're just starting now and like by the time the bottom of the recession hits, maybe you aren't ready to fully deploy, but I do think there are opportunities here if you phrase it in the right lens. I am, obviously disheartened with the fact that my net worth has dropped. Like, geez, I've lost like well over $500,000 in crypto, more on probably if you include all of my crypto and crypto adjacent and related investments, I've probably lost almost $1 million in that space. So that sucks, but like $1 million isn't, I'm not gonna say it's not a lot of money to me, but I mean, I make $1 million every year. So I'm like, oh darn, I've lost a year, it's like net, but think of all the opportunities that I can now jump into because I still have cash to deploy, thankfully. I still have credit, I still have access to all of this opportunity. So I look at it and I'm trying to be positive about it because there's so much opportunity that's going to be existing right now. And the reason there's so much opportunity in part is that, again, the banks have tightened up, they're not lending as much. The government isn't pumping stimulus money into the economy yet. They will again soon. Once they put us into recession, then the money train, the faucets will open up again. And in that time, it will be, hopefully you got in and invested into businesses or real estate before that faucet opens up, or just as that faucet is opening up, ideally, if you're trying to time it. Again, none of us have a crystal ball, and it's really hard to time the market. What we do know is that we're in a recession, and so if you start dollar cost averaging down now, you have at least 30% upside on the NASDAQ right now, 5-10 years from now, minimum, right? So that's huge. Could it get worse? Sure. But if you're long-term focused right now, you don't care. You're focused on the long term. Okay, next question. Sorry, that was a precious metals question. Yeah, so I think precious metals should be 1 to 2%, a small percentage of your portfolio. There's nothing wrong with having some hedge. I love silver and gold. I do hold some physical silver and gold as well. I think it's a good asset class. I think if things get much worse and we go to another 2008, we could see gold do 50% or 70% return. So there is some crazy upside on gold and not a lot of downside. Other than relative to other assets, I don't think it will outperform over a 5 or 10 year period, right? I think short term might be a great play, but I think gold versus say, Bitcoin over the next 10 years, not even close. Not even close. I think Bitcoin's gonna blow gold out of the water when it 10x's, right? Whereas I don't think gold will 10x, it's just not gonna happen. But it could be a great short-term hedge. As we go into a recession, I could see gold jumping 50% in value, especially relative to the NASDAQ. It should perform slightly inversed. So yeah, I mean, precious metals could be a great play. I think we've kind of missed the wagon on commodities and oil, but I mean, they've been beat up a little bit the last couple of weeks. So there could be an entry point here if you think that things might get worse, or if the Russian situation isn't under control. Depends on, a lot of it's gambling, right? You don't know. But yeah, I mean, it could get worse before it gets better. I think long term, the world's going to move away from oil, so it's not a great like 25-year type investment where you don't look at it for a while. But if you're in a short-term trade it a little bit, sure. I could see how it could play out well as we move through this tightening recession cycle. Hey, I was just watching your video on Graham's channel from 4 years ago. Cool. Right on. I'm glad that video still gets some playtime. I've changed so much in the last few years. It's just my mindset has gone from like, dumpster diving to like, super frugal Mike to now where it's like I'm focused on how can I earn more money, how can I allocate my time most effectively. And unfortunately, frugality, it isn't important. Like I just order my groceries Instacart as an example because it's not worth my time to go shopping at the grocery store. You literally do like a coaching call or something more valuable at that time and make way more money. So it's interesting how my mindset's shifted to realize how precious time is. There's a great quote. I'm 29 now, so it's getting older. There's a great quote Alex Hermosi was saying on his Instagram channel, and I like his content. A lot of it's really relatable as an entrepreneur. But he says something to the effect of like, if you had, he would trade all the money in the world to be 20 again. And it's like, it's interesting because when you're 20, you would trade everything you have for the money. But when you're, when you're almost out of your 20s, and I guess he's in his 30s now, right? He's like probably 32 or 33. He says that he would trade all the money in the world to go back and be 20 again. So that's something to think about, right? That like, if you ask all the wealthy people, almost all of them would trade all the money that they have to be 20 again. So be blessed if you're young right now because you have opportunity of time. And a lot of us who imagine being able to go back in 10 years, how much better we could do with a redo. And how, it again, just underscores the importance of time, of life. Your life's blood is time. And so you should be very careful with your time and don't squander it. Pro tips. Next question on the list was, why would you sell Canadian real estate with mortgages and put into American real estate without mortgages? You wouldn't do that. I couldn't see why anyone would want to go from being levered to being unlevered. That doesn't make any sense at all. I think leverage is the only thing that makes real estate investing attractive. Without it, why? Why not just invest in equities? The advantage of real estate, Canadian or American, is to have debt associated to it. So commercial, as I do more commercial projects, I would definitely have commercial debt attached to those commercial projects. As little money as you can put in on a great ROI project, let's say you're making like 50% ROI or 25% ROI, let's say, and you're able to put 30% down or 33% down, that can triple that return from 25 to 75% ROI. I guess cost of debt on top of that, so maybe 65% ROI. It juices up your return on investment significantly. And it's also a tax write-off, which is pretty sweet. So you can write that interest off against your cash flow, which is another bonus. So yeah, definitely want to use leverage in any business you buy. You want to involve leverage. It makes the deal so much better. Next question. Hey Mike, when are you going to start buying real estate? So we're actually buying a property in Florida shortly here, a partner and I. That's closing, I think, tomorrow, officially. So, yeah, I mean, I still continue to buy. We're buying, it's more of this one's more of an emotional purchase, but we bought a property in Port Franks near Grand Bend, and it's got 2 cottages on one lot with a water view. That's a unique little property that's probably more emotional. Like my dad's going to probably end up staying in one of the units. It will cash flow. We'll be able to rent it out as well, but it was a good buy for sure. I think that even if the market falls, interestingly, the cottage country market hasn't fallen that much. There's still multiple offers on properties. So it's interesting how waterfront real estate has held up well in the recession, but investment properties haven't held up as well. Just goes to show people are interested in Ontario and Canada. Even in times of recession, people still want to have their cottage. In fact, more now than ever because they don't want to travel very far. They want to be close to home and have that paradise spot they can get away to. So I think there's something to be said about the mini luxury vacations close by. I think there's a really good, readjust my feet. Really good upside opportunity for, whoa, what did I just do? Just snapped the spring off my thing. Sorry guys. I went to scroll down and I snapped the spring off my tripod thing here. A little drama for you. So I'm probably not going to be buying that much at all in London, just because again, my long-term goals are investing in the Bahamas, Florida, cottage country real estate in Canada on the water, and probably Costa Rica. So those 4 countries I want to be buying larger resort style plays. It just is for me, it's a lifestyle thing. I don't want to be a landlord in Ontario long term. I want to be leaving Canada as a tax resident. So again, I will have some properties probably on the water here. I grew up here, and so I want, for my kids long term, I want to be able to hand them down some properties on the water there so they can have that opportunity. It's more emotional for me, but again, I also think it will hold its value better long term. And other reasons are like I don't want to have tenants. I'd rather have short-term tenants. I don't want to have tenants that can come after me in the landlord tenant board. It's just not something I'm interested in anymore. I did grind London, and I think there's still opportunity here, but more now than there was 4 or 5 months ago, for sure. London was getting pretty dry, but it's getting juicy again, and I think we might see 1% rule properties coming back. We're getting close. There are some opportunities starting to slide across my desk. We're getting close to 1% rule. That will come, and we're getting really close to it. Like my Sixplex is a turnkey, like almost 10 grand a month, signed for like under 1.2, right? That's very close to 1% rule. You never get that in larger multifamily. That's nice. Like if it's shitty and it needs work, it's got like bummy carpets, a shitty Sixplex in East London, sure, 1% rule all day, right? If that's doing 10,000 a month, you pay $1 million for it, okay. Like it's East London, right? We're talking like King Edward, Adelaide, Gramercy, all those shitty apartment building areas. Yeah, okay. But like in a nice area like downtown, Old South, Byron, you shouldn't see these kind of cap rates that we're seeing right now in these good areas. And so there's a lot of opportunity, interestingly. There is a lot of garbage out there too, so be careful, right? Like there's a lot of stuff that's still being peddled that is in bad areas that hasn't fallen in price yet enough, and it will. Give it time. The shitty areas do not outperform the good areas over long term. I just believe that wholeheartedly. And the tenant profile, I would happily take a 20% lower cash flow to have a 30% better building in a better area, better tenant profile all day. It's all about the dirt where your property is. So don't get tricked into buying garbage in garbage areas. Buy quality areas. For me, it's a lifestyle thing, right? Like I'm also probably not you guys, right? Because I'm using real estate to facilitate a lifestyle that I want. I want to have resorts in 4 countries. I think that would be cool. If I can build a business along the life, I want to be traveling to check out my properties in Florida and go to the Bahamas, go to Costa Rica, come back to Canada in the summer and check out my resorts. And like, I want to build a business around something I enjoy doing. But that's because I have so much money that I don't need to do anything at all. So I'm not necessarily chasing the best return. I'm chasing I don't want to lose money. So my first and foremost is like a stable return in a good quality property. I'm not looking at anything in East London right now. I have no interest in garbage areas of town. I get that there might be great cash flow there, but like for me, I'm about preserving wealth, and I'm about building a business that is something I want to be proud of the business that I have. I want it to be a lifestyle thing. So I don't know. That's where I feel like it makes a lot of sense. Thank you, JT, for your comment. Next question is, man, your inspiration, Han Solo says. Thanks, man. Do you do seminars? Nope, I don't sell anything. I have nothing to sell you at all. I have no courses. I have no coaching. I have no books. I have no masterminds at all. It would be cool, I think, someday to add a plug on of partnering with someone who wanted to build those courses and books and also wanted to build some sort of mastermind retreats just for entrepreneurs, like build a like-minded community of people where we can get together and like share a lot of the same shit that we all talk about and enjoy, and be around people who are of a similar mindset. That's, I think, next level part of the lifestyle business that I want to eventually build. And it comes down to like, I could just autopilot, right? And like just invest in the stock market and collect my like 800, 900 grand a year and just be chill, right? Or I could put the energy in and make 2-3 million and build a lifestyle business around that. And for me, that sounds way more attractive than just chilling it. I don't know, I'm just a type of person who can't chill. Like I do nothing for a day or two and I'm like, I'm on the MLS looking at deals. I'm like, I'm on Crexy and looking at deals in Florida and multifamily. And I'm like, just looking for opportunities, right? I can't not. That's my passion. Like my fun thing to do is look at deals, look at businesses for sale, look at real estate and stuff like that. I just enjoy that. I can't help myself. I'm weird that way. But you don't see me at night looking at like garbage properties in the ghetto, or in C or B areas of town. I don't covet those. It's like, who wants to collect low tier Pokemon cards? You want to collect the nice stuff. So there's yeah, that's part of why I don't. People ask like, why don't you like those areas of town? It's like, I used to own properties in East London. We had tons of garbage properties in garbage areas, and I made lots of cash flow in it. And I dealt with the bummiest tenants with bed bugs and roaches, landlord tenant board fighting, and all of that stuff tends to only happen in those areas. I have never had those issues in any of my A+ properties ever. All the tenants there, like, if they ever had like bugs, they would just treat it themselves because they're wealthy enough. They don't want to live with that. You deal with the poor quality customer, and you get a lot more stress. It's better to elevate to the better quality customer. You spend a lot less time, a lot less effort, and in the end, I do believe you get a better return on your money because of that. Focusing on the high ticket quality properties and clientele that come along with that. So I'd much rather service a higher end quality luxury type of customer than service a low income tenant customer. And again, in real estate, you're servicing a clientele, and why wouldn't you want to service a better clientele? That's just a no-brainer. Anyway, next question was, pay off Heloc or invest in more real estate. So I personally wouldn't pay off your Heloc. I think it's better to invest in other asset classes. For me right now, lending is a great one. If you're worried about, like, there are certain people who are really fearful of, the market declining 10-20%. Could happen, I don't know. If you're holding long term, you don't care anyway. You're in it for the cash flow, and you just hold the property. 5 years from now, it's all up anyway. Like 10 years from now, the price of everything is like probably double real estate wise. So if you're buying something right now, you're like, I'm buying for 500, but it could go down to like 450. Maybe it's worth 600 right now, but it could go down a little more. It's like 10 years from now, it's worth 800, 900,000. Do you care if you're going to hold it anyway for 10 years? Like a farmer who's going to own a property for 50 years doesn't go check the price of the farm every year, right? It's just not the way it is. All right, work my way down the questions, one at a time. I think that lending would be, to answer your question, JT, I think lending would be the better way to go. The reason I say that is because when you buy property, you put a mortgage on it and you put your down payment down. Your down payment is the first thing to be lost, right? It's the unsecured piece. The secured first mortgage, in the event of like market crashes and the person sells the property, the equity gets eaten up first. So if you have a $100,000 property, $70,000 mortgage on it, you put $30,000 down as your down payment, and the market crashes, and property's worth like $80,000. You sell it for $80,000 after fees and everything else. Let's say you get $78,000. Your $30,000 down payment is now worth $8,000. That's all you get back, and the bank loses nothing, or the mortgage holder, the private lender, loses nothing because their $70,000 is secured against an asset that just sold for $80,000. Your whole down payment gets eaten up first. So the lender gets their money back and fees because you defaulted and it had to be sold. And so they get probably the whole $78,000, to be honest. They get $70,000 plus the $8,000. You get nothing as the owner. In fact, in Canada, there are recourse mortgages, which means they can come after your assets personally as well. They'll take your car that you drive as well for restitution. Whereas in the US, they have non-recourse. So the US will experience a deeper recession than we will here in Ontario, because Ontario has recourse mortgages. You have to literally go bankrupt to get out of it. Whereas in the US, you just hand the keys to the bank, you walk away. It's non-recourse. So they don't come after you. You say, here, take the property, walk away, and the bank's like, okay, it's a non-recourse mortgage, so we can't come after you. That's why, again, it gets crazy down there. And I'm excited for opportunities in Florida because it's going to get crazy down there when people start walking away and get underwater as they have to refinance and mortgage terms expire, and et cetera, so forth. Next, I forget what I was going to say. It was the next point of that lending. You can lend right now, first mortgages between 8 and 12% on really safe deals, like 70% loan to value, maybe even 60% loan to value, because people, if you buy a little bit of discount, maybe you could negotiate 55-60% with the right borrower. And if you lend to a quality borrower, someone who's wealthy, like someone like myself, or even less wealthy than myself, there are people who have 5-10 properties that have a couple $1 million, they have jobs, whatever. They're probably fine to lend against, compared to someone who's got their first rental property and they're like paycheck to paycheck, or compared to someone who's got like no cash reserves and no stocks and has like one rental property or 2 rental properties. That's a higher risk loan, in my opinion, because that person's poor. The poorer you are, the more chance that if that project goes bad, they don't have reserves to draw on to carry that project. Like if I did a deal as an example and it went horribly wrong, and like the house burned down and there was no insurance, which like you always have insurance. That's a bad example. I don't know. Like let's just say something happened, the market fell apart, and like, you force sell it. I don't know why you'd force sell it, but you sell it at the bottom, and the lender's like, oh my god, I'm not gonna get paid back because I lent 70% loan to value and the market dropped 30%. It's like someone like me, I would just cover the difference because I could be sued. They could just take it from my stock portfolio or from one of my other properties, right? So there's recourse, and so that's important when you're lending. But anyway, I think if we're going to use Heloc funds, it's nice in this economy where we're having a lot of instability to take those Heloc funds and match them to because it's a fixed interest payment every month. You have interest on that Heloc. It's nice to put that against a fixed loan. And the reason I think it's better to do, it's safer, not better, safer to do that is because you're in the first secured position if you're lending a first secured mortgage, and you don't want to be in second secured position ideally during these times, first secured only. If you're in that first secured position, then as the market, drops, say, whatever, it drops 20% more on top of what we've already dropped, then you're in 70% loan to value, you're safe. Like, you're in first secured, you're safe. If you had bought a property instead, you'd be in the third secured effectively, right? Because you're, as the equity person, the person who put the down payment, as the owner of the property, your money gets eaten up first. Every dollar of your money is gone first. So you could lose the entire, if you just put your HELOC and use it as a down payment on a property, I mean, it's theoretically you could lose some of that money. And losing money borrowed against your house, HELOC is home equity line of credit. So I'm assuming it's against your house that you live in. You could have a HELOC though on a rental property, it's possible. But anyway, it's just not something you want to get yourself into where you can do it, and if you're careful of what you're buying, I think buying real estate's a better way to do it. But if you're very risk averse during these times and you're waiting for a bottom, just lend out. And it's a safe way to make a nice spread on your HELOC rather than just paying your HELOC off. I think it's the compromised option. So that's what I'd recommend, is taking the capital and lending it back out. Next question. Yo, what's up, Hungarian? We are acquiring a business right now. It's awesome. Right on. This is the time to be doing that. Hit me up if you guys have any opportunities. Anyone watching this has an opportunity to buy a business and they need a money partner. They need an experienced partner to come on and help in any way. I'm always ears to hearing about opportunities. I don't really want to be buying businesses unless they're synergetic to real estate in some way, or they're doing 7 figures. Otherwise, it's not really worth my time to look into all the numbers on it. I successfully bought a medical company a couple of years ago, and it was a great investment. I'm glad I did, with a couple of partners. JT says, I'm finding deals all day to get $2K rent per $100K I spent on the house. Not in London, Ontario, you're not, so it must be a different market. Per $100K I spent on a house. I'm about to buy a triplex for $78K. The return $1,800 a month in rent. So you know what's nice about that percentage, that 2% rule, in markets like in the Midwest, you're gonna, like in the Midwest of the US and in small junky towns where there's not great infrastructure and a low population growth. So talking about like all the small towns in Ontario, there's tons of them where you can get really great deals like that. You can buy duplexes for like 300 grand that rent for like 1,500 a unit. So you're talking like 1% rule. Or you can find like, triplexes that sell for 400,000 in these smaller towns that might rent for like 6,000 a month. So you're getting 1.5% rule, or like you're talking about there. The nice thing about that is there's pretty great margins. You don't get as good appreciation. Long term, your property won't go up as much in value like it does in some of the major metropolitan areas, but you get some great cash flow. So yeah, those opportunities are fantastic when you can buy something in the Midwest that's like a 3% rule. And you see it. What you don't want to do is get the really cheap properties. The reason I say that is because like the $100,000 property, the bank doesn't even want to lend on a property that's like $78,000. Like you're talking about a mortgage that's like 50 grand. It's not even worth their time to go through that review process. And the other issue is that the fixed costs crush you, right? So like on a $78,000 house, you may still pay $2,000 a month, $2,000 a year in property taxes, which like there are $500,000 properties that have $2,000 a month in property taxes. So the property taxes relative to the rent are very high. The insurance cost relative to the rent is very high. Just because the property is 78 grand doesn't mean the insurance is super, super low as a percentage. So what you'll find is the margins are squeezed a bit by your fixed costs. So like your furnace is still $3,000 to replace on a $1 million house or a $100,000 house. In most cases, give or take 20, 30%. But the fixed costs as a percentage of the house are way higher. Your CapEx is what kills you on those small deals. CapEx being furnace, roof, windows, big major expenditures, hot water tanks, etc., so forth. All the infrastructure of the home and the things, that the foundation, et cetera, so forth, that really hurt you. So just be careful. There are lots of opportunities, and it can be very, very attractive, especially in a down market where you can get into some of these deals. And there's nothing wrong with it. I can see how you can make a lot of cash flow doing it. I just don't have an interest in traveling to the Midwest or going to those small towns where that's a thing. I can see how you can make a business doing it and make great money. But yeah, that's one thing to look out for in those small deals. But yeah, they're great. They're definitely something that that you can make a lot of money on. I know people who do the small deals and do lots of them at scale, and they make lots of money. Where and how do you talk about finding business deals? So one place you can go is literally just go on realtor.ca, start calling all the investment realtors that you see popping up. They will know of pocket listings. That's a great place to start. Call up the local wholesalers. Go on Facebook Marketplace. Go on Kijiji. Go on Craigslist. For sale by owner, FSBOs, you see when you're driving around. There's lots of places you can go just networking with people who have a property that maybe they want to sell. There's lots of different avenues to find deals. As far as selling businesses, Facebook Marketplace, Kijiji, call business brokers. Most of the bigger businesses that sell don't go through like the public market. They go through business brokers. So you can call, like, there's probably a couple dozen in your city that just sell businesses for a living. Oftentimes they're like ex-realtors. It varies, but you'll find them. You just type in like business brokers, and you'll find lots of different brokerages that specialize just in selling businesses. And talk to them and say, hey, this is the kind of business I'm looking for. And be specific, because if you say I'm looking for any business that cash flows, they're never going to remember you. But if you're like, I'm the guy who's looking for, you know, I don't know, business wineries, or I'm the guy looking for property management companies, or whatever you're looking for, they'll remember you when they come across those businesses, and they'll have you in their Rolodex, and they'll call you, or they'll have you in their phone or in their database or whatever, and they'll call you. And that's when you can get in there and have that discussion and sit down with the seller, oftentimes with the business broker present, to help you put the deal together. That's their job, is to help get the deal together, and they get a commission for that, like a realtor would. But yeah, definitely. Fred says, super chat, my question about American real estate assumes as a Canadian you can't get mortgages in the US. Okay, so you're saying you can't get mortgages. Why wouldn't you be able to get mortgages? Oh, you can't get mortgages, by the way. You can go into, you can get into CIBC, has a branch there. Bank of Montreal has BMO Harris down in the US. TD as well as huge. RBC. You can get a second property, or if you want to buy your first property in the US, they do lending. They do have US arms that lend you to buy it. Like, you're personally, you just go buy a second property in Florida. You have to pay tax, but you get a tax credit for any tax you pay in the US. So usually you pay a little bit more tax in Canada, so you pay a little extra tax because Canada is worse. They're still going to charge you tax on what you invest in the US, unfortunately. But yeah, you can get mortgages still. There are also commercial lenders who will lend to Canadians, no problem, especially if you have like a good job or a high net worth, no problem. You can open up a corp down there and buy commercial real estate, no problem. I also partner, yes. It's much easier if you can find a US partner to partner with, especially if you can get the US partner and you did an off-title JV agreement with someone you trusted. The US partner can actually 1031 exchange. So you could, in theory, like flip up and do deals, capital gain, like no tax at all, because they just keep deferring the capital gains tax using the fact they're a US resident. They get that 1031 exchange. So there are ways to JV doing that, and I know people who are doing that. I want to do one of those. I'm hoping to do one of those with a US partner. It's cool to be able to use that 1031 exchange. I guess in theory, eventually when I get paid out, I won't be able to exchange anything, but yeah. And then I see another super chat here. Ibra, thanks a lot. Please read my other account. I don't know what that means. Is there a comment that I missed? So it says, Ibra says, I can't buy S&P 500 ETFs because of real estate and financial sectors. For religious reasons, is a good idea to buy ETFs of the other 9 sectors in the S&P. Sure, I mean, that's weird. I didn't know you couldn't. That makes sense, though. There are certain religions that can't do lending either. Or when they structure the lending, it has to be like, you're giving me a set fee and I'm not charging you any interest. I know a lot of people do that because interest charging is illegal or immoral, I guess, in certain religions. And respect to your creed or whatever you follow. To each their own. Yeah, I mean, it sucks to not get that exposure, unfortunately. It would be nice to have a diversified portfolio. But yeah, there are lots of other businesses you can invest in other sectors. Be as diversified as you can be. So yeah, I would say buy the emerging market ETFs, buy, those sectors that you can buy, and it sucks to be limited on your diversification based on that, but work within the limits that you have. It's better than not investing at all, for sure. Ta-da. Thank you for the super chats. That's why I prioritized that question, because he super chatted. Hey Mike, how do you calculate ARV when looking at deals to BRRRR with cosmetic renos? Well, one way to calculate ARV is to compare against other comparable sales in the area. So that's the best way. But there are three ways to appraise a property, right? There's the cost-based approach, there's the comparable analysis approach, and there is the, oh, my brain is blanking right now. 3 methods of appraisal. This is appraisal 101. Comparable analysis is probably the easiest way that you could do it. My brain is just drawing a blank on the third way, but comparable analysis is the best way. So you find a bunch of properties that are similar, sold in the same street, same neighborhood. One's a 3-bedroom, yours is a 2-bedroom. You can find out, okay, the difference between a 3-bedroom and 2-bedroom is 20 grand. So you can make that adjustment. And then another property maybe has a garage and yours doesn't. So you look up how much your garage is worth, 10, 15,000 in the area. So you adjust for that garage. Maybe it's got different baths, so you adjust for the baths. But you use a comparable analysis approach and you try to make the other sales around you comparable to yours using cost base. So typically it's an approach like that. If they can find an exact apples to apples comparison, they'll just use that. It's an art more than a science. That's why 2 appraisers come into the same property and come up with totally different values. Thank you so much, Harriet. Thank you. It is the income approach. God, how do I not know that? I know that. Like, literally commercial real estate only uses the income approach. They don't use comparable analysis. They use, well, I guess they use a cap rate, which is based on what other commercial properties are selling on based on their income statements, their net operating income statements. Smaller properties don't use the operating income statement as a value method for the most part, by and large. But 4-plex and larger, you definitely want to use the net operating income approach. So you would say, hey, if I get in here and double the rents, then I could double the value of the building. In a lot of the cases, if you can crank the expenses down a bit and double the rents, that's a nice play for a large multifamily. Almost always the goal is to get into a large multifamily, pay as little as you can, and then change all the units out, make them somewhat nicer, and then double the rents and lower the expenses. And that's like a surefire way to BRRRR on a large multifamily. Smaller multifamily, you gotta do cosmetic renos, and be careful with how you renovate to ensure that you're not spending too much that crushes your ARV. All right, I'll go fast, Jonas. So I'm at my limit. I started late today, so I've got to go quicker. Would you buy Bitcoin during this drop? Yep, a little bit. I'm mostly hodling, unfortunately. My entry time was not ideal. Just started my second Airbnb and I'm looking to hire cleaners. Any tips or tricks for finding good Airbnb cleaners? So washer dryer money, the key is finding people who are reliable. I think is more valuable than anything else for Airbnb, because you want that person to be telling you about all the damages, all the things, the wear and tear, documenting well. So that's more important, I think, than anything else. Even if you have to spend a little bit more money, it's more important because your cleaner is your line of defense against any damages and wear and tear. So you want a good cleaning crew that's following good systems. And that's another piece, is like, you should have good systems set up, like, hey, this is the way that we clean this unit. These are the steps that we follow. Bring a second person with you. Always have multiple cleaners, because if one person's sick, then the other person knows the route and they can get a friend to come with them. They can do the route. So never just have one cleaner. That's a pro tip for Airbnbs. And yeah, I think it's important to find people who align to your values. So that would be another piece. Can they clean? The biggest thing is like, attention to detail, I think, is the most important quality, I think, in a cleaner, other than being like hardworking and doing a good job. That's almost table stakes. I think that like that's a given, but the extra pieces of going above and beyond, documenting damage and whatnot, all of that I think is important. But reliability, affordability, and quality, right? You can never have all three. So you're never going to get a really cheap cleaner that's super reliable and does a really, really good job of all those things you need. So you're going to have to pay more if you want better. And in the end, that might save you money, actually, paying more. That might sound counterintuitive, but like the $30 an hour cleaner is probably going to save you money in the long term versus the $20 an hour cleaner. I know that sounds weird, but anyway, something to think about when you're hiring is like, don't race to the bottom on cost. I've done that. I've been there with contractors racing to the bottom, and it sucks. You save on money, but you lose on time and carrying cost and everything else and quality, and you go back and do the job twice. So Pay well, I think, is probably the best advice I can give whenever you're hiring for any position. But be very, scrutinize the hell out of that resume and that person and make sure that they're the right fit. Pay well, but be very picky. If the person isn't a good fit, fire fast. Because you're paying well, you can get someone else that's really great. How do you feel about buying a single family right now? There's some great deals. Depends on your market and where you're at. Especially if you're in a house hack, now's a good time. The market could turn at any time. It may get worse before it gets better, but at some point, when the Fed eases up, there will be a rush of capital back into real estate, because there's a lot of people sitting on the sidelines saying, I don't know if I should buy right now, but have capital, and they're waiting to deploy. There's a lot of people waiting to deploy, and I think that don't use the word capitalization, because that's not really the thing in real estate, but there's just capital waiting right now to deploy. So I know right now you can negotiate a good deal. So negotiate a really, really good deal that factors in that it might get worse. Seller financing seems always bad for the seller. Why do any of them do it? I'll give you a great example of Hong Kong Philly, why it's great for the seller. Let's say I have a building that I bought for $500,000 and it's worth $1 million now. If I do vendor financing, I can delay my capital gain over 5 years instead of paying all my capital gain in 1 year, in which case I could potentially save on a $500,000 gain by providing vendor financing. I could, in theory, do a 0% VTB, which is insane. It's the most insane financing ever. But it's possible that I could save 200 grand in tax, in which case the vendor financing option, to me, the seller, is actually worth $200,000. And so there are lots of situations where the capital gain deferrals and delays and stretch out over 5 tax years is advantageous. You can even set it up as a balloon payment where you pay almost no capital gain till the end of the term. Talk to your accountant, but that's where it gets really juicy, is in the capital gains savings. So vendor financing is attractive for the sellers. A lot of sellers too are gonna get this cash payout from selling their business or whatever, and what are they gonna do with that? They're gonna go to their bank to tell them to put it in a GIC or a mutual fund, and a GIC is paying 3%. So if you're offering them 5 or 7, and it's in their business that they know and love, they get to stay involved in their business to some extent, which is maybe what they want. But moreover, they're getting cash every month. They know their business can pay it. They're comfortable with that, getting more than they would have got putting it in the bank. And I know I have family members who have just cash sitting in the bank. I'm guys, deploy that. And they just don't feel comfortable. So it's a comfort thing too. But vendor financing can make a lot of sense for the seller. And as a buyer, it's your job to explain that value to the seller. And if you don't know that how they're gonna save in capital gains tax, and how this could, if they had the building for 10 years, how this could save them hundreds of thousands of dollars over a 5-year period, that's value. And you might be able to get that $200,000 in tax savings. You may be able to split it with them, $100,000 each off your purchase price, in which case that's $100 grand in your pocket, because you explained tax law and structured the deal better than someone else. And that's why your offer might win out, even though it's $100,000 less than the next other offer. It could also come down to emotional reasons too, but just the math alone, tax savings are important. So there's a good example for you. Thank you so much. Appreciate it. I love the frugal stuff. In the beginning of your journey, being frugal is super important, because every dollar you save now is worth $60 at retirement. You have a 60x over your life growth. So if you can save $1,000 when you're 19 years old or 18 years old or 20 years old, that's going to be, thousands of dollars potentially down the line if you invest it correctly over the entire duration of your life compounded. So every dollar you save when you're young is super, super important. Make good decisions when you're young, and frugality is important. Building high income skills is important in your early formative entrepreneurial years. And I think your 20s are your formidable. I can't get it off my tongue. You guys know what I mean. What should your credit be before buying your first rental property? You can buy a rental property with 600 credit score. It's not going to be as good of a rate as, say, an 850 credit score, but the better the credit score, the more likely it'll be to be approved, and the better the rate that you're going to get. So the better the credit, the better. But if you have low credit, you can always work on that. It's not necessarily a limiting blocker. What's the best market in today's current environment? It's hard to say, right? I think spreading it around to the NASDAQ, crypto, real estate, there's spread it to all the sectors. They're all being affected right now. Where I wouldn't go, interestingly, is I think there's not a lot of value in the value plays in the oil right now. I just don't, short term, I don't know. Yes, but long term, I don't see it. I think it's overpriced. I can see it coming back down when things resolve in the next 5 years. Have you ever acquired business financing? Yes, we shopped financing between BMO and a couple of other banks, and we ended up getting financing, and then we refinanced the business that we bought in Etobicoke. We refinanced it again, and actually pulled all of our capital out. So we refinanced it and got our entire down payment out. So we bought a business with 0 money down. I'm talking a large business with millions in cash flow. So yeah, you can definitely buy big businesses and get the banks to finance it. They're hungry to lend against quality businesses with good 2 years of financials that are growing and in the right segments. So yeah, you can definitely lock up some sweet financing stuff. The end is always the best, I get the most juice out, but I gotta go. I'll choose one more question. It's been a whole hour. I've already gone past what I'm supposed to. I gotta put my kids to bed. How do you find tradespeople? So just that question, Facebook Marketplace, talking to people at real estate events, talking to people who have good connections. Once you find a good plumber, talk to your plumber, ask him if he knows an electrician. If you found a good electrician, ask him if he knows a good carpenter. Ask that carpenter if they know a good flooring guy, if they can bring in. Because good trades know other good trades, and that's the best way is through word of mouth. I found that people in the networks are the best versus like finding your random Craigslist guy. There are gems out there, sure, but like 8 out of 10 of them are hacks, frauds. They're going to come in there, do a shitty job, overcharge you. A lot of that in the construction industry, so just be careful. I like word of mouth and referral the best, but in the beginning, you're trying to build your list out. You got to just try a few people. If you find someone good, ask them if they know people, et cetera, so forth. And you'll build your network, and away you go. You have 3 of every trade. Before you know it, an Excel spreadsheet that you can call upon. But trades you'll burn through. It's a hard profession. People come in and out of the trades all the time, so it's difficult unless you're paying like the top quality companies, in which case there's no profit in real estate investing when you're paying the top plumbing company, the top electrician company, the top carpenter company. They'll do a good job, but they'll be so expensive you'll make no money. Your basement renovation will cost you 120 grand and it'll add $100,000 in value to your property, in which case you'll spend too much and you'll make nothing. So you want to try to get that renovation done for like 70 or 80. Don't pay the guy that's 40. Do spend 70 or 80 and then add 100,000 in value. You make a little spread there. Everyone wins. That's what you want. Pay the middle guy, not the most expensive, not the cheapest. All right, everyone. Thank you so much for watching. I'm way over my time limit. It's been over an hour and I've enjoyed it. You guys know the action items for the couple properties I have for sale. If you're interested in buying any of my London properties or interested in partnering with me on future deals in Florida, I'm open to partnering with accredited investors. So hit me up. You guys know how to get a hold of me. RosehartCapital@gmail.com or at Mike Rosehart on Instagram. Thanks everyone for watching, and we'll see you next week. And I appreciate you tuning in. I appreciate the comments. If I missed your comment, put in the comments of this video, and I'll try to respond to it, or send me a comment on a future video, and I'll be happy to answer it. I'm live every week from 7 to 8 p.m. Eastern Standard Time. And if I talk too quickly for you, luckily, YouTube has a playback speed of 0.5 or 0.75 that will slow my voice right down for you. I personally like to listen to YouTube at 1.5 to 2 times speed, which is why I speak at that speed, because that's just the flow state. So anyway, thank you so much for watching, everyone. Remember, the secret to unlocking a wealthier you is to spend less, earn more, and maximize returns on the difference. Bye, everyone. See you next week.